was just hoping to speak to one of your representatives about Tether, the cryptocurrency. It's kind of amazing just how dirty you feel investigating this subject, but there is no avoiding it. It's time to talk about Tether. Before we get into the main story, could I just ask you to kindly subscribe to the channel? If this kind of content is your jam, then that would be appreciated. And let me know what you think of the new studio setup in the comments below. So last week, I looked at algorithmic stablecoins, and if you missed that episode, there will be a link just up there. And in it, I kind of skated over the real reason why all these stablecoin alternatives exist. Predominantly, it's Tether. Now, there is a prevailing opinion that Tether can't be trusted, but it's so big and so dominant in the market that it represents an existential threat to the whole of crypto. Tether FUD re-emerges every time Bitcoin goes up, and so it proved yet again, this time driven by an anonymous Medium article entitled "The Bit Short Inside Crypto's Doomsday Machine," which went viral, drawing gleeful "I told you so" tweets and vigorous rebuttal everywhere from some pretty well-known faces. What's troubling though is, the moment anybody raises a strong objection to Tether, they are immediately and vocally accused of being anti-crypto, which is completely upside down because the whole point of this technology was to create greater transparency and disintermediate power from central authorities. But opaque and centralized is exactly what Tether is. Now you can go one of two ways here, just ignore it and act like it's somebody else's problem, or stare the elephant in the eye and start asking questions. Now, doing the former is exactly how cults are created, or indeed how otherwise smart and sensible people just kept on buying subprime garbage during the housing crisis. Now look, I am not a forensic accountant. I will not sit here and tell you that Tether is used to manipulate the markets and provide evidence of such, because I'm not qualified to make such an assessment. However, the Office of the Attorney General of the Southern District of New York is. And they're doing exactly that right now, so I will wait to hear what they have to say before making any pronouncements. But I do have questions, and it's those questions I will attempt to answer in this film. Now, we'll leave quick links in the description below so you can easily navigate to the one you're interested in. And I do think that they are legitimate concerns we should all reasonably have about USDT or Tether. And I will try to be balanced as well, innocent until proven guilty and all that. So, let's go. Okay, let's go. Question 1. What is Tether? Which is probably a suitable place to start. Now, Tether describes itself as digital money for the digital age, the best of both worlds. Tether converts cash into digital currency to anchor or tether the value to the price of national currencies like the US dollar, the euro, and the offshore Chinese yuan. So it's a stable coin. Every Tether is 1-to-1 pegged to the dollar, so 1 USDT is always valued by Tether at 1 USD. And it was originally launched as real coin by Brock Pierce. Yes, that Brock Pierce. America. Craig Sellers and Reeve Collins. And the very first Tethers were minted on October the 6th, 2014. And back then the premise was simple. US dollars in, Tethers out, and that's it. Which brings me to question 2. Should we be concerned about Tether? Well, Sam, Nick, Peter, Willy Woo, they're all telling us we're idiots. It's just standard crypto FUD. But see, there is only one rule in crypto. Don't trust, verify. So let's see what we can do, and I promise I will try and steer clear of speculation. Let's take a look at a few key stats here. Tether is really the backbone of the whole cryptocurrency market, with an average daily transaction volume of over $98 billion, and it's the most actively traded coin in the industry, used by virtually all trading platforms and cryptocurrency service providers. And at the time of writing this, Tether is seeing over $127 billion in volume, with a market cap just shy of $25 billion. Now, unlike most projects whose market cap is kind of a fugazi, Tethers should in theory represent a highly accurate one, if the promised reserves do in fact exist. And if we look at the Masari chart for stablecoins, you start to get a picture of just what a stranglehold USDT has over the entire market. How much hangs on the implicit trust that 1 USDT does in fact genuinely represent a dollar, because if it doesn't, well then you can imagine. So that brings me to question 3. What is the source of the FUD around Tether. Now, Tether has faced a multitude of accusations over the last few years that it is a form of privately issued fiat currency backed not by real dollars in any meaningful way, but minted in ever-increasing quantities to buy and inflate the price of assets like, primarily, BTC through exchanges like, primarily, Bitfinex. And the company minted $2 billion in the second week of January alone. And you can clearly see the growth on this chart. And this is the irony of the whole situation. Bitcoin's 2021 narrative is the hedge against inflation as the Fed continues to magic trillions of dollars out of thin air. But the Tether printer is going brrr every bit as fast, sort of. But you get my point. And it's worth noting that it is exceedingly hard to redeem USDT from Tether Limited for US dollars. They require a $100,000 minimum per transaction, along with a 0.1% fee. The machine is somewhat asymmetrically configured. You could say fast out, slow in. So is this real demand driven by derivatives trading, or is there something else going on? Which leads to graphics like this one. Now, I've read countless threads claiming to expose Tether's manipulation of Bitcoin markets, and if you follow that particular thread, it's very easy to become tangled up in correlation is not causation debates, and we're not going to do that today. And of course, it's not like manipulation doesn't exist in other markets.
A lot of times when I was short at my hedge fund and I was positioned short, meaning I needed it down, I would create a level of activity beforehand that could drive the futures. It doesn't take much money.
For the most part, for every argument, there is a credible counter-argument, but the whiff of suspicion refuses to go away. And Tether themselves haven't helped. There are bigger stories sitting underneath all this, but for now, let's just look at one specific question. What is Tether actually backed by? Well, it's simple. It's backed 1-to-1 by dollars, 1 USDT equals $1. The end. Except that that isn't the answer, although it is supposed to be, which is frustrating because of all the cryptocurrencies around. And they are baffling at times. Tether should be the simplest to understand and the simplest to verify, but it just isn't. Thanks to the magic of the Wayback Machine, we can look at Tether's launch website from 2015. Here, they are clear. Tether currency is 100% backed by actual assets in our reserve account and can be viewed and verified in real time. In 2017, they'd splashed a fresh coat of paint on the graphics and proudly claimed, every Tether is always backed 1-to-1 by traditional currency held in our reserve. So 1 USDT is always equivalent to 1 USD, which sounds very much as if $1 US went in and a Tether was printed in return. It's so simple. Now, if you head to Tether's website now, you find a little button which reads Proof of Funds. And it takes you to a document issued by the law firm Free, Sporkin & Sullivan, in which we read that FSS was able to confirm the US dollar balances in accounts owned or controlled by Tether at its banks, including selecting the appropriate confirmation dates and reporting to Tether as to the results of such inquiries. Now, further on, it reads, the above confirmation of bank and Tether balances should not be construed as the result of an audit and were not conducted in accordance with generally accepted auditing standards. It's now January 2021. That document was issued in 2018 and it's still on their website. And to date, there still has been no audit. If the Tethers are indeed sufficiently backed, then surely a rock-solid audit is the best way to put all these accusations and FUD firmly to bed. But of course, there isn't, so this fuels heavy speculation. But in April 2019, the wording on the Tether website quietly changed to the following. Every Tether is always 100% backed by reserves, which include traditional currency and cash equivalents, and from time to time may include other assets and receivables from loans made by Tether to third parties, which may include affiliated entities. So, rather than acting as a custodian for fiat currency, Tether was lending and investing in other, presumably more lucrative assets. Now look, I'm no financial advisor, but it's literally the first thing you are told when you start playing the stock market. The value of your investments can go down as well as up. And if your stated aim is to provide stability to a highly volatile market, then this just seems odd. But things would turn out to be much weirder when Stuart Hergner, general counsel for Tether, stated in an affidavit to the Supreme Court of the state of New York that things were not at all as stated. As of the date, April 30th, I am signing this affidavit. Tether has cash and cash equivalents, bracket short-term securities on hand totaling approximately $2.1 billion, representing approximately 74% of the current outstanding tethers. Now, yes, they were forced into this admission by pressure from the NYAG, and more on the reasons behind that later, but it does involve a line of credit to Bitfinex. It was a stunning admission, and one which only served to heighten suspicions of the company, given how vigorously they had previously defended their model. They only possessed 3/4 of the expected reserves, in other words, a fractional reserve. And look, before we go into full outrage mode, this is perfectly common in modern banking, in which only a fraction of bank deposits are backed by actual cash on hand and available for withdrawal. Now, this is done to theoretically expand the economy by freeing capital for lending, and most banks are required to keep only 10% of the deposit. But Tether isn't a bank, although it did appear to be acting like one. And that does beg the question, who is providing banking services? Now, Tether has had a pretty eventful history with its banks. They were originally working with Wells Fargo, but that service was cut off in March 2017, and Tether/Bitfinex promptly sued, only to withdraw the suit a week later.
I was just kidding! Come on!
In May 2018, Bloomberg confirmed that Tether had been banking with Puerto Rico's Noble Bank, co-founded by,
America.
Brock Pierce.
Puerto Rico can become anything it wants.
But in October, there are reports that Noble is up for sale as a result of losing several of its big customers. An unsubstantiated rumor circled that Bank of New York Mellon, Noble's custodial bank in the US, put the hammer down and told them to end their association with Tether. And in November, Tether announces that they are now banking with Deltec Bank and Trust Limited in the Bahamas. Deltec is crypto-friendly, it turns out. So friendly, in fact, that just a few days ago, they announced something rather surprising.
We've maintained a very significant position in the beneficiaries of maximum monetization. So that does include gold, it includes other commodities as well. It also includes a large position in Bitcoin, which has obviously received a lot of attention recently. We bought Bitcoin for our clients at about $9,300. So that worked very well through 2020, and we expect it to continue working well in 2021 as the printing presses continue to run hot.
Now, digging around, I even found a letter from Deltec to Tether, officially stating their balance. All is well, right? Well, it was the only such letter that I found, and there could be more. But let's get real here. It's a letter, it's not an audit. It states a figure that was presumably correct at one point in time, but it doesn't really prove anything. Now, there's a game I like to play when researching banks, which is to type their name into Google and then add the word scandal afterwards. And you can have hours of fun doing this with the likes of Wells Fargo, HSBC, and many, many more. And here's what happens when you do the same for Deltec. Now, this inspired a Twitter account by the name of Deltect, which goes to great lengths to expose alleged wrongdoings surrounding the Bahamian bank. And that Twitter account feels very similar to the now infamous Bitfinex account, which tirelessly attacked Bitfinex, attempting to expose market manipulation and other misdeeds and accusing the exchange of minting tethers out of thin air to pay off debts. And his wish was granted as the granddaddy of AGs, the New York Attorney General, opened an investigation into both Bitfinex and Tether. So that leads me to my next question. What is happening with the OAG investigation? Well, the investigation began with the OAG requesting a large number of documents from Tether Limited, the purpose of which was to help the OAG understand how tethers are being issued, backed, and accounted for, and how tethers are flowing through the crypto ecosystem. And it resulted in them suing for ongoing fraud being carried out by Bitfinex and Tether. The investigation is specifically looking at the apparent loss of $850 million worth of commingled client and corporate funds, which was not notified to investors and may constitute securities and commodities fraud. Now, the money disappeared when Bitfinex apparently handed over the hundreds of millions to a Panamanian payment processing company called Crypto Capital Corp, apparently outsourcing their funds storage and withdrawals/deposits to this company. According to the NYAG, this was done without a contract between Bitfinex and Crypto Capital, and for reasons not entirely clear, the funds are gone. Bitfinex and Tether claim that the money is tied up in a series of asset freezes being enforced by multiple foreign governments on Crypto Capital's bank accounts. The CEO of Crypto Capital was indicted in 2019 on fraud charges, the company president was extradited to Poland on drug and money laundering charges, and one notable Crypto Capital operator, Reginald Fowler, has also been indicted for running an unlicensed money transmitting business for digital asset traders. And one has to wonder what Bitfinex was doing working with them anyway. In any case, Bitfinex no longer has access to the funds. It was a massive loss and one which Bitfinex did not disclose to investors. Instead, the NYAG alleges Bitfinex used up to $900 million of Tether's reserves to cover the loss and hide what could have been a critical solvency problem. And this was back in the period when Tether was still claiming that its coin was fully backed by US currency, a virtual impossibility if $900 million of the reserves were being funneled to a sister company. And if we take a step back here, for a long time, Tether and Bitfinex hid the fact that they were in fact owned by the same company. But with the release of the Paradise Papers, all of that came into the open. And once you learn that they are, and you ponder the consequences of a major exchange being intimately connected with a money issuance mechanism, well, it doesn't look great, does it? Now, Tether's lawyers have been stalling and asking for extensions on delivery of documents, and the most recent deadline was the 15th of July, but yes, they once again requested an extension. So, next question, how are the Tether team responding to all this? Well, they're fighting, which is entirely their right, and there's an awful lot at stake here, so it's important that they do. Paolo Arduino, the CTO, and Stuart Hergner, General Counsel, who admitted to the fractional reserve, recently went on Peter McCormack's podcast to answer some questions. It's worth noting here that Peter McCormack was the guy at the start who said the Tether FUD comes from one place, salty tears. He also received a huge amount of support from Tether in his lawsuit against Craig Wright. Now, I won't go into all the detail here because Amy Castor has done a detailed transcript and commentary on her blog, which will give you much to ponder. The reactions on Reddit, though, do tell some of the story. Paolo Arduino's photo collage of supporters included Sam Alameda of FTX, amongst others. But this also may become more understandable once you see this. What are friends for? And this brings me to my next question. What happens if Tether goes down? According to Dragonfly Capital managing partner Hasib Qureshi, the legal action against Tether would be a disaster for the industry. But as it always does, crypto will eventually recover, and when the dust settles, we'll enter the third stage of crypto money. Order books will reconstitute themselves around a new crypto dollar. International crypto markets will quickly acknowledge this new standard, eager to get back to business. But which crypto dollar will succeed Tether? And he goes on to describe the rise of what he calls RUSD, or a regulated crypto dollar, which could be USDC, but again, who knows? On December the 23rd, 2020, the President's Working Group on Financial Markets released a statement on critical regulatory issues relevant to the stablecoin industry. And according to the task force, a clear set of rules needs to be created to ensure that a potential mass adoption of stablecoins doesn't undermine government interests. Depending on its design and other factors, a stablecoin may constitute a security, commodity, or derivative subject to the US Federal Securities, Commodity, and/or Derivatives laws. If so, the Federal Security Laws 3 and/or the Commodity Exchange Act 4 would govern the stablecoin itself, transactions in and/or participants involved in the stablecoin arrangement. So imagine that stablecoins are considered a security. Wow, that's profound. And if Tether is considered a security, then yeah, we'll see a lot more litigation. The victory of Joe Biden over Donald Trump in November means we will now see a raft of new legislators with their own ideas about how to handle crypto. And one of these will be the new chairperson of the Securities and Exchange Commission, SEC, and the current favorite is former US Commodity Futures Trading Commission Chairman Gary Gensler, who, it must be said, is something of a bulldog. And that brings me to my final question. Why did it all need to be so complicated? In many ways, the Tether business model is brilliant. All they have to do is trade a fiat currency for a digital one, then deposit the fiat in a bank account and exchange them when requested. If that $25 billion market cap is real, then that is an absolutely monstrous amount of capital that can sit earning interest. And just think about what you could do with that money. Even if they were earning the worst savings account interest rate I could find from Bank of America, that's still a cool $250 million just in simple interest alone. Now, I couldn't find how many employees there actually are at Tether, but LinkedIn gives the vague figure of 11 to 50. But if we assume 50, then that interest alone would mean every employee could be paid $5 million from the interest alone. And I highly doubt that that is the rate that they are getting. But even beyond that, how hard is it to audit your accounts? If we compare Paxos, USDC, or BUSD, all of whom are registered in New York, there are monthly attestation reports that state exactly how much is in the reserves. And I find it far easier to trust a report from Grant Thornton than the other options we've seen so far in this film. The fact Tether has been unable to provide even one makes it incredibly difficult to place any faith in them. And yet, here we are. Nobody wants the music to stop. But let's just end on one final question. When audit? Now, who knows when the OAG will be able to bring their case to court, but there will undoubtedly be fireworks once they do. And this might well be crypto's subprime mortgage moment. But we have had plenty of time to prepare. And if it is, then you can be assured that there will be some huge shorts at play. And on that note, I shall leave you. Money Printer goes. This has been the Defiant.
Pay that man his money.